Hey folks, it's Rod with Pow Group. Welcome back on the Pursuit of Wealth, your home for MJ stocks, crypto assets, and interviews. Also home to the best MJ community. Today's Tuesday, October 24th. I hope you're well. And in this video, we're going to be discussing Canopy Growth. It was the lead bull today, up over 23%. And we had a daily bear flag target that has been reached. I did a previous video where we had an inverse head and shoulders that was invalidated. And then we had a daily bear flag that was confirming, and we were seeing downward pressure and continuation. And that daily bear flag was targeting 50 cents, which we did reach today. So we're going to dive into the Canopy Growth chart. I'll give my thoughts and opinions on what to expect in the days, weeks, months ahead. Before we get to that, though, make sure to smash the like. It helps support me in the channel. It doesn't cost you anything. If you're new, you can subscribe, tick the bell, all that good stuff, and you'll be notified on any future videos or when I go live. Also, make sure to give us a follow on X, which is previously Twitter. The handle for that is @GroupPow. Also, before we get to it, we do have a sponsor for today's video, and that is Moomoo. So this is an app that I wanted to share with everybody today, and you can take your investing game to the next level. It's founded by a NASDAQ-listed fintech with over 20 million users worldwide. Moomoo provides visualized data, over 100 indicators, and other analyzing tools, all for free. You can use it to trade U.S. stocks. The fees are low, and the trading hours are long as well, which I really like. To get 16 hours worth of trading from 4 a.m. to 8 p.m. and you can use it on desktop, phone, and tablet. You can open your account today with my link in the description. I'll put it in the comment section below as well and in the description. But essentially, if you create your account today with my link, you'll receive $30 in cash. So I do get a kickback, full disclosure on that. And there is a disclaimer here on the screen. And I also had a fall over the weekend, yesterday, and we had our first snowfall here in Canada, in Edmonton, Canada, and had a pretty nasty fall. Got out of the car and I hit some rough patch of ice, and anyway, feet up in the air and hit my head off the pavement. So I've been nursing this today. I've been taking Tylenol and just kind of laying low and putting some ice on it. So I've been feeling a little bit better, but hopefully I'll be back to my regular self tomorrow. But as I mentioned, we did a video not too long ago mentioning that the inverse head and shoulders right here was invalidated. So if we just do a quick head and shoulders pattern here, I removed it, but we'll just draw it real quick so everybody knows what I was talking about. So this was the inverse head and shoulders that we were looking at potentially playing out. And then we had the right shoulder lining up with the left shoulder, perfect symmetry. And then we broke down and we didn't actually confirm it. I said we needed to break 80 cents to confirm it, and we did not. We bounced and we got as high as about 73 cents, almost just below 74 cents, but we didn't confirm it with a break of 80 cents. Then we came down and we lost 65, which invalidated it. And then we even lost the head there at 62 cents. So even if you went short there on a loss of 62, that would have been about a 24% short opportunity. So that was invalidated. And then you take the daily bear flag here from the high to the low with your fib tool to this level right there. And then you take your trend line and you measure that from the high to the low. And then you move it out to the 0.382 fib. And it says we were targeting about 50 cents USD here on CGC. And then we actually overshot that. So sometimes you can overshoot, undershoot. In this case, we got very close to daily oversold, coming off of daily overbought after confirming a daily downtrend with a high, low, lower high, and lower low. We also had a bear cross of the daily EMAs, signaling that we could see a lot more downside. And then, after such a monster move, right, when we went from about 34 cents all the way up to $1.92, that was about 460% of upside, right, in a very short period of time after the HHS recommendation to Schedule 3. And then from there, we've pulled back about 75%, right? So after a 100, 200% move, you should expect 10, 20, maybe even 30% of a pullback on some names. For example, if we bring up MSOS, that was a name that had just over 100% of gains after that news, right? So we had about 108%. So in that case, rule of thumb is, 10, 20, maybe 30% pullback, right? In extreme cases. And here we are, we're down over 30% now, right? So if something runs like CDC, okay, if it's a little over 100%, what if it's a little over 400% or close to 500% in Canopy's case, right? See, almost just under 500%. Well, then we could expect maybe 40 or 50+% pullback. And like I said, in this case, we pulled back about 75%. And we had all of the signals that were signaling that we were more than likely going to go down. And that was the daily downtrend confirming the EMA 12 and 26 bear cross. Look what happened last time it crossed bear. We dropped all the way from about $2, mid $2 range, all the way down to 34 cents, Then we had a bull cross, saw a massive upside, and then a bear cross. So in the shorter term, the yellow is below the longer term, the white. In this case, it's the 12 and 26 period. The 12 is the yellow line and the 26 is the white line. And then when the shorter term's above the longer term and they cross, that's a bear cross, and then we can expect downside. So that was leading into that, and it's a lagging indicator, right? It's following price. So it's exponential moving average, and then we were heavily overbought there as well. And one thing that we didn't do as well was confirm a weekly uptrend. This move all came off of the low, realistically. So we had the low. Actually, we did confirm a weekly uptrend here with the low, high, higher low, and higher high. But then we had no support on the weekly time frame all the way down to about 38 cents. And we still have yet to see the weekly EMA 12 and 26 bull cross. But what we didn't do is we didn't confirm a monthly uptrend. So we were still in a monthly downtrend with lower highs and lower lows. Anything under 477 on that monthly bounce was just a lower high here in that monthly downtrend. And we topped out right below the EMA 12, which we haven't been able to get it back above since the bear market began. And one thing that I'm looking at to occur that's going to mark the bottom is in, and we're more than likely starting a multi-year bull market. Well, first this monthly uptrend's confirming, which we'll look at in just a second. But look what we haven't done since this bear market and since we went from $56 all the way down to 34 cents. We haven't seen a bull cross of the weekly exponential moving averages. So the last time it happened, price was right around here at around 18 bucks. Then it shot up to 56. Then we had the shorter term above the longer term. When that crossed, that was a bear cross, went from about 20 bucks all the way down to 34 cents. So now we're seeing another bull cross of these weekly EMAs, like I said, which is the first time that it's happened since, well, first time that it may happen if it happens over the next few weeks. But that's the first time since October of 2020. So that's a long time ago. We're in October now, so that's 3 years ago since we had a weekly EMA 12 and 26 bull cross. So when that does occur, it could happen over the next few weeks, in my opinion, and that could be as a result of safer banking, maybe even rescheduling. Maybe DEA gets back with a response from HHS's recommendation to Schedule 3. We also have November 8th, which will be the Florida adult use ballot vote, and arguments will be presented. So we could potentially get some information with regards to Florida and whether or not MJ will be on the ballot for adult use in 2024. We're also leading into an election year. We have Germany coming online. We have the MJ Act review here in Canada. Uplisting of the NYSE and the NASDAQ is likely going to be a massive catalyst as well. And we're starting to see MSOs uplist to major Canadian exchanges like the TSX as well, right? Curaleaf's looking to do so. So if we can see a weekly EMA 12 and 26 bull cross, then that's going to give me confident that the bottom is in and we're starting a potential multi-year bull market. And the more names that do so, the better. And there's already some names that are doing so. Like, for example, Tilray, if we bring up the weekly time frame, it had its weekly EMA 12 and 26 bull cross. And that's the first time since October and into the end of the year as well in 2020. But like I said, CGC, we need to confirm monthly uptrends as well, ASAP. The more names that do so, the better. So for example, Curaleaf is an example that we can look at. So low, high, higher low, and higher high. So last month we broke to a higher high over 568. Once we broke 568, that gave us the higher high. So we had the low, high. This was a higher low because we were consolidating, losing the low of the previous week, but it was a higher low compared to 296. And then once we broke to a higher high, this candle, that gave us that higher low, higher high pattern. And then also we have AYR, which is a name that confirmed monthly uptrends. So again, the more names that confirm monthly uptrends like Curaleaf and AYR, low, high, higher low, and higher high. So then we switch back to CGC and we say, okay, how does that pattern look on CGC? We have the low, high, higher low. How do we know the higher low is forming? Because we're losing the low of the previous candle. So once we lost 52 cents, we started monthly consolidation and we hit a low of 47 cents. So bulls from the low of the date yesterday, I guess it was, we still had about 26% of room to form that monthly higher low. And this is what we want to see when we start monthly consolidation. We don't want to get smacked down right to support very quickly, because that shows that the bears are still dominating. The fact that bulls bought that dip so quickly and we're seeing that lower wick there for the last 4 candles really is a good sign, because that's what we want to see at near the bottom. We want to see volume climax. We want to see all-time high record volume, which we had last month in the month of September. And then we want to see massive moves off of the bottom, which we did. We saw almost 500%, so that's looking really, really good. And then we want to see monthly uptrends confirm, which we're forming the higher low now. So if we hold 34 cents on this monthly higher low in consolidation, and then from here break resistance at 192, we're back in a monthly uptrend. And that will be the first time since, again, back in 2020. And then on that run up to $56 on the hopes of US legalization and just the Dems taking control of the Senate, right? So this is looking really, really good. And then, like I said, if we can get that weekly EMA 12 and 26 bull cross as well, then it's all systems go. And then on the weekly time frame, we could still see a MACD bear cross, but like I said, we still have about 25-26% of downside that we could use as room to form that monthly higher low. So it's not the end of the world, but we already had the bear cross on the stochastic and we're below the 10-week moving average. So we could see a little bit more weakness ahead, in my opinion, and we topped out right at the 50 weekly moving average. We're still quite a ways away as well before we see the golden cross occur. And again, a lot of other names have already saw their golden crosses, like Tilray, but just because right back here it happened, right, it took many months for the price really to reach its full potential, right? And then the death cross happened, and then it took multiple years for the bottom to occur. And that's very common in MJ and in crypto and high risk assets, right, that have a lot of retail investor attention. Is the moves happen quick to the upside, usually in a matter of months, and then the moves to the downside are long drawn out, brutal, painful processes because they have to shake everybody out, right? And then just bore the hell out of people. But if you're wondering why the stock was up today, I think that I didn't see any news. If anybody did come across any news, then let me know. But obviously they got creditor protection for BioSteel, so they're going to be cutting losses with that, as it was really adding losses and not driving profitability. We know they're looking to create Canopy USA and U.S. holdings company in the U.S. So again, in my opinion, I don't think there was anything really driving this, just the fact that we had that daily bear flag target that was met. We hit that and then overshot it a little bit, and then $50 psychological is 50 cent psychological is a nice round psychological number, and we dipped below it at 47.5 cents. And in my opinion, anything under 50 cents was a nice buying opportunity, but realistically can't go wrong with adding anywhere here, in my opinion. But again, not financial advice. But we didn't have any daily resistance as well, all the way up to about 73 cents. So we went from 73 cents after invalidating that inverse head and shoulders to seeing from that high of the bounce there to the low, we were down 35%. And then from 192, right, the high of the bounce off of the HHS recommendation, we were down at, like I said, about 75%. So you need to expect a pretty massive move when we didn't have any resistance until 73 cents. So today, as soon as we broke the high of yesterday at 52.8-ish cents, then the daily bounce was underway, and we're still in a daily downtrend with lower highs and lower lows. And we topped out right at daily EMA 12. And that's what usually happens, is we gravitate back towards these exponential moving averages. We get above, we get extended to the upside, we come back down, we get extended to the downside, we come back up. So again, it was just back testing its EMA 12 support, coming off, basically daily oversold. And we already got the EMA 12 and 26 bear cross out of the way. And then, like I said, from the low to price action resistance, we didn't have any resistance for about 53%. And then from the low to EMA 12, we didn't have any resistance until about 2%, right? So again, in my opinion, this was just technical. We were just due for a daily bounce. We were coming off very close to daily oversold. I mentioned daily oversold would be a good area to target for entries. And then same with Tilray. Tilray coming off daily oversold as well, starting the daily bounce, and off of its low, it was up over 11%. And then it had a daily bear flag target of 195, and I mentioned it could go to 175 based on how weak the sector still was and the broader market. And then sure enough, look at the low there, 175. So, and I said that'd be a good area to target for daily oversold, and that should be a nice entry opportunity, and it played out to perfection. But again, it's not about me having a crystal ball or being right or wrong. It's just taking a look at the charts and then putting together what the technicals are saying along with the fundamentals in the sector, the broader market, right? What's going on in the world, interest rates, the macroeconomic landscape. And it was likely saying that we could see a little bit more downside. But in my opinion, like I said, we're just looking for monthly higher lows, weekly EMA 12 and 26 bull crosses, and we haven't seen that yet. But in my opinion, this was all technical, and so far, this is sort of what we want to see. I know most people don't want to hear that because, we were just at almost $2, and now we're down at 60 cents again. But we need the monthly higher low, which we're forming now. So the bright side of this all is that we could confirm a monthly uptrend. It's all about 192 from here and 150 support. It's all about support and resistance. It's all about 192 resistance and 34 cents support. And that's what I have been telling people, is it's all about support and resistance. So we have key support at 34 cents, key resistance at $1.92. If we lose one's going to break first, right? If we lose 34 cents, then it's a monthly downtrend continuation with lower highs and lower lows. And if we hold that support level and we break resistance, key resistance at 192, then we're in a monthly uptrend. And at that point, we can more than likely expect the bear market to be over. But also make sure to check out powmerch.ca. You can score some of your Team Canopy swag there and other POW merchandise that helps support the channel as well. There's tons of other swag and symbols on there as well, not just Canopy. But essentially, this is a new hat that I created as well. This was super dope. And then, shirts and hoodies. Got over 25 orders so far, so I really do appreciate all of the support from each and every one of you along the way. It's been a journey, and looking forward to being on the journey with each and every one of you. And like I said, I'll be making videos until as long as I'm on this earth. And got through the video today. Like I said, still got a pretty bad headache after that brutal fall. Hurt my hip as well, and kind of braced myself with my hand, so my wrist is a little sore, but I got a cut just beside my temple and my eye, kind of on my eyebrow, and pretty swollen at the moment, but got some ice on there and starting to feel a lot better with some Tylenol, but hopefully I'll be back to my regular self tomorrow. Anyways, it's Rod with POW Group. Thanks again for joining us in the pursuit of wealth. Hope you have a fantastic evening, and we'll see you again on the next video.